C3.ai under pressure this morning after reporting weaker than expected subscription revenue in the first quarter. The company's profit miss was less than expected and revenue met expectations. Not enough to boost investor sentiment. Shares moving lower right now by about 13%. At least 4 firms also cutting their price targets on the stock after earnings. Here with more and the earnings reaction, we've got Tom Siebel, who's the chairman and CEO of C3.ai. Tom, it's always a pleasure to get your perspective, your view on what took place during the quarter and what the street is trying to price in as well right now. Where do you believe that the street and investors may be indexing or giving more weight to these results?
Brad, by any standards, it was a great quarter. I mean, at 21% top line year-over-year growth, we're one of the fastest growing public software companies in the software universe. I think that our deal volume increased 122%. Okay, we're cash positive for the quarter. There was nothing that wasn't good about the quarter. I think that what people don't understand, I think that people are overreacting to the fact that professional services were a little bit larger than they thought. But what we don't understand there, so I think $13.8 million in professional services, 10 million of that was actually software. This was compiled code delivered to our customers as a core component of the product, and that they pay for over the terms of their agreement. Now, looks like software, smells like software, is software, but under an accounting change that took place, a technical change that took place in 2019 or 2020 called ASC 606, you need to recognize that $10 million as professional services. It is software.
Tom, it wasn't a great quarter, and that's why we're seeing the stock down higher than it's been since May of 2023. I'm curious, from your perspective, it seems like one of the issues for that subscription revenue was companies being a little bit more cautious on their AI spend. What are you hearing from clients about their AI CapEx appetite and the degree to which they're hoping to kind of dilute the amount of AI CapEx that they have to protect their own balance sheets moving forward?
The top line revenue grew 21%, exceeded our guidance, exceeded the software, exceeded consensus. I think we're one of the 10 fastest growing companies in the software universe.
But the decline in subscription revenue seems to be a sticking point. So I'm curious what you saw throughout the quarter that drove that
What people are
issue.
thinking about in subscription, they're really looking at licenses versus professional services. Professional services are things like what Palantir does or what Accenture does. These are custom projects, okay? What we delivered, $10 million of what we characterize as professional services due to accounting rules was in fact software. And this is at 93% gross margin. So this is software. That's what, but for a technical accounting change, it's software. It was a great quarter.
Tom, all these things considered, looking out from here, I think the street is looking for more expansion in the generative AI category specifically and the capabilities there, and even more traction, it seems, or ability to entrench yourself more in the federal sector. Where are you seeing some of those efforts play out right now? What is the lead time for that to come to fruition?
I think that the federal, as I recall, was 30% of our bookings. That was very healthy. The expansion that we're seeing in generative AI, in state and local, in manufacturing, okay, in federal, okay, and across the board, law firms, you name it, generative AI and state and local are amongst our fastest growing businesses. I think federal was 30% of our, I'm not sure what 30% of our bookings or 30% of our revenue, but very healthy. So, I mean, those businesses are looking pretty good.
Just a quick follow on that. A lot of the scrutiny that we've seen from investors over the course of this earnings season has been the amount of capital expenditures, the amount of investment that companies are continuing to put forward in the name of generative AI and hoping that they're not underinvesting at this juncture. What is that return on investment profile that you're looking at C3.ai and when investors can expect that to show up in the financial performance on a more outsized level?
The generative AI applications that we're delivering across the board are delivering, value kind of very quickly. I think, full production applications deployed in, 3, 4, 5 months. So this is a very fast return, very rapidly growing market, and it's unknowably large.
Tom, I want to end on the Baker Hughes partnership. We understand that is a large percent of your revenue, but Dan Brennan, who oversaw the C3 Baker Hughes partnership, has left the company. What does that mean about the status of that partnership?
Dan Brennan was a close friend and a great professional. I enjoyed working with him. There are, thousands of professionals at Baker Hughes. We work with their entire senior management team. I'm certain that we're coordinating with them on a daily basis. They're a great customer. They're a great partner, and we continue to enjoy a close and productive relationship.
So I know the deal is set to expire in April of 2025. Any plans for it to expire early?
There's no plans for it to expire early. And as you know, Madison, I think that deal has been extended now 3 or 4 times. So I think originally it was 3 years and then 4 years and then 5 years, and it might have been extended even after that. So there's some history of it being extended in the past.
Tom, thanks so much for taking the time here with us, diving into some of these results. Tom Siebel, Chairman and CEO of C3.ai. Good to see you, Tom.
Thank you, Brad.